So I think that we're going to see the same thing here in the S&P 500, in the NASDAQ. Basically, think of what is your average everyday investor kind of blindly putting his 401k into. It's these ones, and I think he's pretty close to getting a rug pull.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 8th through September 15th, 2025, while supplies last. First this week, half-ounce gold eagles are just $89 over melt per coin. Next, assorted 1-ounce silver rounds are $1.59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Barton from In It to Win It. Steve, thank you so much for joining us today.
Thanks for having me, Elijah.
Well, it's great to have you today. I did want to get into the charts today. One of the themes that we've been talking about on the channel is that the stock market looks really overvalued at the moment. And you can kind of consider the different stages of a bull market, with the last one being like a blow off top stage, retail mania. And it seems like there is more retail involvement right now in the stock market, which is concerning. What are you seeing on the charts today?
Okay, I'll pull up the S&P 500 here, and we can all take a look together, and I'll show you what I'm seeing on the charts. And so basically, we had right over here, we had what we call the Liberation Day sell-off, right? This was when Trump came out with all of his with his chalkboard with all the tariffs, and just had a massive sell-off in the market. And then we had this pretty nice run up here. Well, nice if you were invested in it, all the way up to where we are now, just around 6,500. And I can't help but notice there's a trend line right here that it looked to me like we were finally having the breakdown that you're talking about right here. That was on Tuesday of last week. And it was a false breakdown. It broke back up. And now we are hitting on new nominal all-time highs, but you can't help but notice this kind of wedge pattern here, right? And whenever you get like a triangle, like wedge pattern like that, I like to think of it like a pinball in a pinball machine, right? It kind of bounces back and forth and then boom, resolves one way, usually violently, one way or the other. And when we look at macro, what's going on with the economy, I got to believe that this is overvalued. If I forget macro and I just look at the charts here, let me get rid of this bottom trend line and now just focus on the price right here of this upward channel trend line right here, right? And you can see that the price is gradually getting higher. Now, this purple and yellow line that you see down here, that's called the RSI, and that stands for Relative Strength Index. And the way I look at that is I look at that as kind of a forecaster of what's going to happen in the future. And what we have here is some divergence. So basically, as price is moving higher, the RSI is kind of consecutively moving lower. So we can see the price is here. RSI is really high. If I hover over it and look at this purple number over there, we can see that that is a number of 76. And then we go to the next hump over here, and the RSI is now 67. And then we go to the next one over here, and now the RSI is 64. And then when we go to where it is today, it's 62. So although the price is going up, what it's forecasting that it's going to go down. So I would expect the S&P 500 to be rolling over here. When you time that and look historically at the month of September, for whatever reason, September usually ends up being a negative month, and more often than not, in the second half of the month is worse than the first half. So if we follow history, and if this is accurate, which it usually is, then I think we're running out of buyers. And you can see that here. These are volume bars right here. So as each of these last 4 days has gone on, there's been fewer and fewer buyers. So there's fewer buyers running out and more sellers. And so I think we're going to see a rollover here pretty soon. Here's the Qs. This is like the NASDAQ. So think of it as like technology, right? Tech stocks. We're seeing a similar thing. You can see the price action up here is kind of going up. Now we're starting to level out. We got a little bit of a double top here, which in technical analysis is oftentimes forecasting a top. We have a top here and a top there, almost exactly the same price. And if we look down what we just learned about the RSI, you can see that the RSI is making lower highs, right? So hovering over here, we have an RSI of 73, and then over here we got one of 68, and then over today we got one of 60. So I think that we're going to see the same thing here in the S&P 500, in the NASDAQ. Basically, think of what is your average everyday investor kind of blindly putting his 401k into. It's these ones, and I think he's pretty close to getting a rug pull.
That's certainly concerning for those invested in the stock market at the moment. If we do, like you mentioned, how you can't not look at fundamentals, which I think is a really good balanced approach here. There's technical analysis, but also fundamentals can, really provide insight as well. So what are some of the fundamentals that you're seeing in the economy and the financial arena that is signaling that, maybe there's a downturn coming and the stock market could go along with it?
Employment numbers haven't been great, and generally speaking, when people are losing their job, the last thing on their mind is how their portfolio is doing. What they're doing is they're selling their portfolio so that they can pay the bills. First and foremost on their mind is putting food on the table, paying the mortgage and the electric bill. So that would kind of go in line with that. Another one that I'm seeing here is the DXY, so the dollar. So this has kind of been in a general downtrend. This is going back to the 60s. It's been in a general downtrend for a while. Now, we do have a bit of a kind of an inflection point here. It has started a trend up, and this parallel channel right here seems to be pretty accurate. I'm of the mind, I'm kind of split on this. Does the dollar get cheaper here and break this pattern and move to the downside? Or is the average everyday person going to panic when they start to see this, run to cash? And if that's the case, then this is going to bounce up. And we may see a little correction in our commodities in the immediate term. But I don't know. I'm betting long term, I think this is going to get weaker.
Certainly. And mentioning commodities, we have been seeing gold and silver rally significantly here. Gold at all-time highs above $3,600 an ounce. It's crazy to say that, but I guess starting with gold, what is your view on as a technical analyst, where we head from here?
Okay, here's the long-term gold chart. We're looking at the monthly rate here, and basically we were all right. It happened. We had the breakout. We're talking forever when we're down here in the 2000s. When is this ever going to come? And this is a really neat pattern in technical analysis. This is called a cup and handle. So we've got the cup forming right here. We have the handle, and then now we have the breakout. And you can measure how far up these are going to go with some simple little tools, and you just take your tool here from the bottom of the cup to the top right side of the cup, and we get about $1,000. And then if you extend that up to the breakout, you can see that we've exceeded that, right? It went up to 3,100 and beyond. So that's the first target of a cup and handle. Now, the next target of a cup and handle, that was the value target, and we can do what's called a logarithmic target. So basically, all you're saying is you're just doing a percentage move. So 99.94, we'll call it a 100% move, all right? And we take that from the breakout right here and on up and go up to 100%. And that would give us an upside target of north of 4,000 on the logarithmic target of gold. So I think that's one of our next targets that we're going to see in gold. Another way you could do it is a tool called a Fibonacci extension. Now, all Fibonacci is it's a mathematical formula that's found in nature by the guy that discovered it. And it's found in seashells. It's found in honeycombs on honeybees and all sorts of stuff. And it can be found in technical analysis on stock charts. So if we run the Fibonacci extension, now this is a long-term projection here. And basically, we're just taking the $250 spot price of gold down here from back in like 1999, the turn of the century, and we run it up to the high of 2011, and then back down to the low of 2015, and it puts this projection out. And each one of these levels here, 38.2%, 50%, 61.8, 78.6. And you can see as we scroll through here, let me go to the weekly and maybe it'll be a little more evident. And you can see that there are some little hiccups along each one of these lines. So the 38.2% retracement, see how there's price action right down there. The 50% retracement, this is not a Fibonacci level, but for some reason it works in stock charts. The 61.8%. Now this one is very accurate when it comes to technical analysis. And we can see that this is where we had this triple top that finally broke out right there. Then you move on to the next one, the 78.6, and then you move on to the next one, and this would be the 100% move. And it's not a coincidence that we have some pauses here and some price action along these levels. So we can use this same tool to project into the future what the next price levels are going to be, right? So we look right here, and we had a lot of price action around 3,400. That was the one where it was just consolidating sideways, you know, kind of forming that bull flag, bullish consolidation. And we just broke out of that recently in the last couple of weeks. So the next level I'm looking at up here is the green line. And when I got onto the weeds in this and put it on the exact dollar amounts down in 2000 and then up in 2011 and then 2015, the number I came up with was 37.51. So that's the price target I'm going to look for and expect that there's probably going to be some bullish consolidation or at least a hiccup in the action of the price once we get up to that level. Now, once we get up there, we could hit. And then maybe by then, the dollar has, the economy's kind of going into the toilet. Your average everyday investor is going to look to, probably move into cash. And maybe they move into that. The dollar gets a little bit stronger, which, it takes fewer of those dollars to buy gold, and it drives the price down a little bit. We got to remember that, just us watching this channel, like, we get it. But when you look at, it's like 1 out of 200 Americans has anything in precious metals, and that's even including shares in Barrick Gold or something, right? So you got to look at it like, most people I think are going to run to the air quotes safety of the dollar, and that could drive this down a little bit. But that's the next level I'm looking at is basically 37.50. And then if we go beyond that, there's other Fibonacci levels here too, 4,400, and then we kind of get into the clouds here, almost 5,500. You could look at different levels, try to get them to line up like the logarithmic target of just north of 4,000 that we did with the cup and handle. I kind of like to look at all of these, and it just gives you an idea of what your next target is and possibly where you could take some profits in the miners.
Certainly. And I know for silver, there's been you mentioned the cup and handle formation. We're looking at a cup and handle formation that goes back about 45 years or even more, almost 50 years there. So what is your take on silver from a technical analyst's point of view right now?
Okay, so I'll start with, and this is what I do on my show, is I like putting in these like red, yellow, and green lines is kind of like, hey, if you want a little bit, here's a nice little spot to maybe accumulate some, and if you want a little more, here's another spot, and if you want a lot, this is what I call the back up the truck moment, right? So I see like downside risk as far as a nice place to enter is around 38. I might need to move that up a little bit, probably to 39 now that we've got some more information here. After that, I like 35 and then 32.50. Now, as far as I don't really see let me zoom way out here on the chart, and we will go to the monthly and go to this long-term pattern like you're seeing here. This is a very, very, very bullish looking chart. As far as technically, is this a cup and handle? I'm a little remiss to call this a cup and handle. It does look like one, right? I mean, we've got this massive cup formation here and then another massive cup formation here. And you could say that, okay, here's a cup and this is the handle. When I look at these things, I like to place bets that are 60% or more. And one of the stipulations with a cup and handle pattern is when you have the run up in the cup. So just like we drew the initial cup right here, and you run a Fibonacci retracement on this, you don't want the handle to go lower than this orange line right here, which is a 38.2% retracement. You don't want it to go lower than that because then your certitude goes a little down. Like maybe if you got this perfect cup right here and the handle went down to the 38.2 and then started to go up, you're like, wow, 80% of the time this works out and you get another moonshot like we got in gold, right? It can go down to the 50% retracement. But if it goes down below that, I look at like the odds of this working out as getting less and less. Now, that being said, this is still a really, really bullish looking chart. I just personally wouldn't call it a cup and handle. So as far as what I'm seeing on this, if I run some of the same Fibonacci extensions, just like we did with gold, let me go to the weekly here to kind of clean it up a little bit. And I'm going to take this last low right here and I'm going to go up to the high and then bring it down right here. And we can get some extension tools on this one. So we're going to go here, we'll go up to the previous high right up there, and then down here and extend it over. And we can see that some of the targets here, the next one that I'm really looking at is $44. And if I zoom in here, so we can see that red line's at 44, and then the next one beyond that, 47, we'll call it 48, round up to 48, close enough to the $50 all-time high mark, right? And after that, we can take a look at the extensions going beyond there. 55, 66, 85. The beauty of this one is once we get past the $50 kind of psychological mark for people, then we're into all-time high resistance or all-time highs. And there is no resistance up above it that I see other than these little levels here, right? And I think that's when it's going to get really exciting. As far as near term, what do I see on some of these patterns? If I zoom in here on the daily, this is what we call a bull flag. And what this formation looks like, let me draw it for you here so we're all on the same page, is you have the pole going up, and then you have what we call bullish consolidation moving sideways. So it's like the flag pole, and then you have kind of the flag blowing in the wind, right? And this is a bullish pattern. So basically what it is like your average, investors kind of find out what's happening in the market, and they all buy it up. And then they start to take profits. They take profits, other people buy, take profits, other people buy. And that's where we are right now, and just kind of this bullish consolidation going sideways. So when I see a pattern like this, as a technician, probabilities start going in my head, right? And I start to say, okay, we're above 60% for sure to move up to what would be the next level on the Fibonacci extension, which would be $44. Another way you could measure this is you could do just like we did before with the cup and handle, is you could take from the bottom of the pole up to the top, and then you extend this up, and this would be another target up here. This would be about $47. If we wanted to be a little more conservative, and maybe what we do is we say that, you know what, this is kind of like a previous bull flag here, so we're actually going to start the pole right there. Then we could be a little more conservative and say, okay, we'll start the pole right here, run it up to the top, and then we'll extend that up to what would be the breakout, and that puts you at about $45. Now we're starting to kind of line up with the Fibonacci extension. $44, $45, tomato. I think that's close enough. For me, it's kind of tough for me to buy these breakouts right here. I'm a little more of a bottom picker, and so I like these Liberation Day sell-offs. You know what I mean? Like catch some, air quotes, bad news in the markets and catch these moments right here. That's a little more me. But if you got a little bit more of a gambler in you, I think it's more likely that this moves to the upside, to the downside. That on top of it, we've got gold that I think is getting pretty close to our next target upside of 37.50. If gold moves up, this is likely going to move up as well. There could be a little arbitrage here, especially with some of the miners. If you're a trader, but as far as accumulation stages on this, I really like accumulation around $38, $39. But, if you're a trader, I think there might be a little moment here.
Do you see in gold or silver at the moment signs that we could be overbought? Because we have moved very fast, very quickly here.
Yes, I do. Interim, let me emphasize my point here. Okay, so each one of these I'm going to take out. So this is a quarterly chart. Every single bar is a quarter, right? a monthly, weekly, daily. All right, so just starting with gold here. And a way to judge, a quick way to judge, very quick, is if we're overbought or not, is to look at what we talked before, the RSI. So if I look at the RSI, this is going back to July of 2011, right? And that's the high. I look at the RSI and it's 94.77. Whenever it gets above this little kind of dotted line right here, that line is set at 70. And this is kind of what all traders look at. So it kind of becomes a self-fulfilling prophecy, you know? All traders have the 200-day, the 50-day, and the 20, not all of them, but the vast majority of them have those same moving averages on there. The vast majority of them have the RSI and the MACD. So we're all looking at the same stuff, you know? And when we're all looking at the same stuff, guys that are really on it will program computers to all look at the same stuff and to automatically buy on these moving averages or automatically sell at certain points. So if we look at the RSI here on gold on the quarterly, it's 94 here. And where we are today is at 86 on the quarterly. Now I'm going to go to the monthly. So now every single bar here is 1 month in time. And if I go back to some of these overbought scenarios, here's 1979. The RSI was at 87. This is on the monthly. And if I go here to the 2011, same point, right? July, 74. And where we are today, 88. Okay, so anything above 70, alarm bells should be going off in your head, right? Back here again, now we're on the weekly in 1980. Okay, so we got 95. We go over here, we've got 73, and where we are today is at 70. Okay, so yes, we definitely are a little stretched in the time frames. Not to say it couldn't go further, but my baseline expectation is that we're still in a bullish uptrend. We still have a long way to go. I mean, I think gold and silver are probably going to 10,200 over the next, I don't know, 2, 3, 4, 5 years. But along the way, you do have pullbacks, and I think we're pretty close to having one in both of the metals. You know, we have these pullbacks here, and we have these pullbacks here. Those are simply buying opportunities. We did have a bit of a bearish candle yesterday. This is what you call a topping tail, but didn't seem to matter. Gold's on the way up again today. But yeah, it wouldn't surprise me at all if we get some little pullbacks here. I can do the same real quick thing. We'll just go on the weekly here for silver, and RSI in 2011 got up to 83. And then here's another moment in 2020, 71. And today we're at 69. I mean, yeah, I think we could be ripe for a pullback, but you know, when these things go, they really, really rip.
Now, another metal more people have been paying attention to recently, as it's increased about 40 to 50% this year, is platinum. We've been talking on the channel, and I know you have as well, about platinum being, if you just look at the ratios, very undervalued compared to gold at the moment. Your take on platinum at the moment?
Okay, we'll start out like we did before and just go long term here on platinum. So this is going back to the 80s, and we can see this is a price chart. Okay, so monthly, we can see that platinum was basically since around 2015. So for 10 years, it's basically just been trading in this range of around, you know, $850, sometimes even lower, up to 1,300 we got there in 2011. I'm sorry, in 2021. But, you know, for the last decade or so, it's just kind of been trading in this sideways channel right here. Now, if we take the long-term trend line here from the tops in 2008 and bring it down here, it touches there again in 2021 and kind of does the pinball thing and then finally breaks out. So we are confirmed in a platinum bull market. We've had a breakout here, which is awesome as platinum investors. And if we take this kind of to give us an upside target here of the rail, we got a touch right here in 2016, another one in 2021, and then another one recently, just a couple of weeks ago, right? Got all the way up to almost $1,500. What's pretty cool about this is I think this one has a long way to go, and I'm not necessarily even looking at price on this to get in and to get out. What I'm doing is what you alluded to, is I'm looking at the ratios. And so if we go to platinum divided by gold, this is an amazing chart. Let me get rid of the drawings here just for a sec to emphasize my point. And so this is, if you take 1 ounce of platinum and you divide it by 1 ounce of gold, and this goes back into the 80s again, and you can see there's moments in history where if we line up the ratio over here, you could trade 1 ounce of platinum would get you 2 ounces of gold, and then today it costs you 3 ounces of platinum to get you 1 ounce of gold, right? It's reversed. So if you take, let's say you wanted to gamble, right? You could literally trade 1 ounce of gold right now and trade it for about 3 ounces of platinum. And I think in the not so distant future, this chart is going to reverse, and you'll be able to take one of those ounces of platinum and get maybe 1 or 1.5 or 2 ounces of gold. And so this is my basic thesis with this, is each one of these white lines is telling you a ratio, and it goes up by half each time. So this is half an ounce of gold will get you 1 ounce of platinum. This is parity. This is 1 to 1, 1.5, 2, and 2.5. And so here's my plan is if platinum gets to parity with gold, then I will trade 50% of my platinum for gold. And if platinum gets to 1.5 times that of gold, then I'll trade 30% of my remaining position. And if platinum gets to 2x with gold, then I'll trade the remaining 20% of my platinum for gold. So this is my plan for it. This is a gamble, right? You know, platinum isn't technically money. I think the Russians used it, back in the 1800s or something. I said that once and got corrected by one of my subscribers. But, this is a gamble. This is speculation. It's certainly not for everyone, but this is how I'm playing it. It
is crazy just to think that if the ratio reverted to where it has been in the past, and gold's, 3,600, we'd have $7,000 platinum. And that's from about 1,400 today. So you can definitely see the upside potential.
Yes. Yeah, I think so. I really do. And here's another one for silver. I mean, I literally made a trade right down here, and today it looks like I'm psychic. At the time it was a little hairy. It was like, this chart could have just kept going down. Yeah, I think that platinum is really, really cheap in comparison to silver. I think doing a swap now, you can basically get, a kilo of silver will get you 1 ounce of platinum, which is kind of nuts when you look at the historic example. Back here in 2003, it took 150 ounces of silver to get you 1 ounce of platinum. Now it's 33 ounces of silver will get you 1 ounce of platinum. So I think this ratio will reverse, I think it's just a matter of time. I have no idea when, but I think it'll happen.
Well, Steve Barton, we really appreciate your time today. It's been a pleasure. I think, again, your approach of looking at the fundamentals and the technicals is really good there. And you've really given us an in-depth approach also to the technicals. That's, I think, a very unique perspective. So we really appreciate your time. If our viewers are interested in learning more, where can they find you?
Thank you so much for having me on. You can check out my YouTube channel, In It to Win It. And if you're new to charting, I came out with a technical analysis series for beginners. I basically it's about 3 hours worth of videos. The first 30 minutes are me showing you mouse click by mouse click how exactly to set up the charts so they look like you saw on the screen now, or tailored to whatever you want. I also publish a free weekly newsletter with market recaps and a premium newsletter where I share the exact stocks that I'm buying and selling with real-time trade alerts. So you can find everything, my channel, newsletters, other resources, and real-time trades on my website, stevebartonmoney.com.
Thank you so much, Steve, and you have a good day and God bless.
Thank you, Elijah. This was fun.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for September 8th through September 15th, 2025, while supplies last. First this week, half-ounce gold eagles are just $89 over melt per coin. Next, assorted 1-ounce silver rounds are $1.59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.